You guys, I've reviewed hundreds of credit reports as a nationwide mortgage lender, and in this video, I'm sharing everything your lender looks for on your credit report in order for you to buy your new home. So, do we care about your credit card balances or your utilization, or how soon after bankruptcy can you get a mortgage? And what is a good credit score to have when buying your new home? So, as promised, I'm back with another video, part of my first time homebuyer series. And so every week right now, I'm dropping something super mortgagey, literally taking you from start to finish on buying your new home. And so last week we talked about the entire home buying process. And this week we're talking about your credit. And then next week we're talking about, well, you'll just have to come back and see next week. And so before the bank lends you, I don't know, $500,000, we want to be sure you have a track record of, I don't know, paying things back on time. And so don't ask about certain requirements like credit pulls. Do not ask me about a credit pull. April, I'm about to submit my application, but first I gotta ask, is it gonna be a hard pull or soft pull? Ma'am, a credit pull does not drop your credit score. Now, what will drop your credit score is, you guys, I get this question a couple times every single year. I cannot help myself. And you guys know I say all this stuff with love. It is not a dig. But, and listen, you can for real do a soft pull, but it just all depends on a few things. But we have bigger fish to fry. Like, let's talk about, how to structure your loan, or how can we save money on your monthly payment. Just remember, your credit score is still just a piece of the pie, because according to FICO.com, the impact from applying for credit will vary from person to person based on their unique credit histories. In general, credit inquiries have a small impact on your FICO scores. For most people, one additional credit inquiry will take less than 5 points off their credit scores. So you're telling me if you have a 720, you may go to a 717. But don't worry about those 3 points, because you can still shop for as many lenders as you like. All of those inquiries will count as one inquiry, because it is obvious that you're shopping for that one type of credit. And in my opinion, not penalizing the homebuyer for multiple credit pulls is a safeguard for the homebuyer, because you should be able to shop for one of the largest purchases in your life. And having the flexibility to speak with different lenders keeps you from feeling like you have to be married, especially to the wrong lender. So as your lender, we'll review your credit report starting from the bottom, and I encourage you to do this on your own if you maybe need to improve your credit score. So the first thing we're looking at are the most negative items, which are total at the bottom. So you'll see the total number of disputes, the number of collections, number of judgments, and bankruptcies. So first, let's talk about the first one, disputes. I don't know why anytime the topic of credit is on the internet, it's always some scamming, some grifting, some unethical stuff going on. But listen to me, because I know you guys aren't like that. If you are legitimately disputing your credit, cool. If not, that's a whole nother conversation. But either way, you can only have up to a total of 1,000 in disputes on your credit report. Why? Because disputes essentially freeze those trade lines, those accounts, which means your credit score completely overlooks them. So I will say you can have medical disputes of any kind, of any of amount. Those are completely disregarded, but anything over 1,000 in disputes is a problem for your mortgage application. This is a federal guideline, because having too many disputes does not reflect an accurate credit score. And as you know, we use your credit score to determine your loan product, to determine your mortgage rate, and it also impacts the cost of your mortgage insurance if you're putting less than 20% down. So the next thing are collections, because you absolutely can buy a house with collections. We, as in my bank, we don't require you to pay collections, but every lender is different. So for the sake of time in this video, let's take, for instance, an FHA loan. If you have a collection item on your credit report, the federal requirement is to account for 5% of your collection balance in your DTI, your debt to income ratio. So if your DTI is fine with that 5% hypothetical payment, then you are good to go. And so that is how you secure a mortgage with a collection. So I'm sure you're thinking now, like, okay, well, April, what about charge-offs? Charge-offs are treated differently and do not have to be paid off, and they do not require this hypothetical payment like collection. So, but also keep in mind that charge-offs will vary based on your lender. The one thing that sometimes comes out of the closet, actually, it always comes out of the closet, like it just pops up, are judgments. And since judgments are pretty much the worst thing to appear on your credit report because it's essentially an unresolved debt brought forth in the court system, we cannot close your loan with judgments. If you have a judgment, don't worry, your deal won't blow up. We're just not going to kill it, but you will have to pay it either before or at the closing table. And so when we're pre-approving you, of course, we'll see all the other things on your credit report, like number of late payments, your credit utilization, or your number of accounts. But do not waste time worrying about these things, or especially paying things off, because what you may believe is in the way of you qualifying for the mortgage, to me as your lender, I'm like, no, we're moving full steam ahead. Don't worry about that. And so, yes, your credit utilization, your payment history, your credit mix, all of those things are key metrics for you. And of course, they influence your credit score. But if we are able to qualify you with your credit report and your credit score as it is, then you are good to go. An emphasis on qualify, because qualifying or affordability or analyzing your credit and spend habits are all different conversations. And in this video, we are talking about qualifying you. We're not talking about whether you are a good steward over your money. We're not talking about, this should be your budget. This is about qualifying you for your new home. But always do what is affordable for you, not what you qualify for. So if you happen to have a bankruptcy, it's not the absolute kiss of death, because you've essentially resolved your debt. So if you filed a Chapter 7 bankruptcy, you can buy a house within 2 years of a discharge date. Chapter 13, your shortest wait time is just 1 year if you're doing a VA loan. A foreclosure with a conventional loan, that's a 7-year waiting period. You can see there's more leniency on the bankruptcy versus the foreclosure, which means do not play around with your mortgage. If you miss a credit card payment, the credit report is like, If you miss a mortgage payment, your credit score is dropping 150 points. Literally. My last thing is your credit score. So the textbook answer is always, oh yeah, you can go down to 580 credit score. You see everybody on the internet, all the real estate professionals, they're like, oh yeah, you just need a 580. Listen, it sounds good. And actually, it's a real thing. It's a factual guideline, okay? But you guys, I've never seen anyone actually close with a 580. I always suggest a good starting point is 620. And on top of that, I say we go up to 850. I mean, as in like, bring a little sand to the beach. So that's what I have for today. Be on lookout for some other videos in my home buyer series. If you know anyone who's thinking of buying a new home this year, please give me a call. I would love to help. I lend in 48 states, and don't be shy, whether you're ready or not. Just like I said, call me. My information is in the description below. And until next time,